So I was gonna make separate videos for a top-down analysis and zooming in, but after looking at this video, I realized I could just do both and explain both of them in one video, which I think will just be beneficial for you because the concepts kind of go hand in hand. So essentially, what top-down analysis is looking at the market from the higher time frames and working your way down every single time frame to the 1 minute, right? And you do this because there might be something in any of these time frames that will be critical information for you. But if you just come onto the chart and go to the 1 minute, for example, you're gonna completely miss out on like the bigger time frame. So here you might see a break of structure here to the downside and look to short, but you need to understand that from the daily, working your way down is just going to be way more important in the long run. So this is essentially top-down analysis and zooming in. I'm essentially going to show you how you find your trade setups and how you basically take them from start to end. And zooming in is essentially I'm just going to go into it. Right. So here in the past we saw equal lows, and as you all know by now, equal lows marks liquidity. Yeah, and the higher the time frame, also the stronger your bias. So we had equal lows here with resting liquidity below, and what we saw was on the daily, price came, dived into that liquidity, and we had a sharp reaction away. Again, touching on cooperation, we had no cooperation to the downside here, right? We had wick rejections and we moved away from that region, which validates our idea of this being a liquidity purge. So what you do now is you look for your reference point. Now, you could have easily, this is what you shouldn't do. You shouldn't look at the SC here, look at the open and see the reaction and take a trade off it, because that would make your stop loss absolutely huge. Like, look, you would have had, it's just ridiculous. You just don't do that, right? So what you do is you line up your confluences. So here we had the open of this SC that took out the liquidity, right? Large body candle. SC is sponsored candles, by the way. But what we also saw is that this sponsored candle lined up with this inefficiency within here. So now we have a reactive region where we'd like to see price come into and bounce and react away from. But again, if you take your position based off of the inefficiency, like so, your stop loss again would just be too big for you to make this trade worth it. Your stop loss would have been below the candle. That's 200 pips. It's just, you wouldn't do that. So what you do is you start working your way down the time frames to get a more accurate point of interest, right? So let's delete this as well. So now we have and also a thing with inefficiencies, the more time frames the inefficiency is present, the more valid the inefficiency is. So as we saw, it was valid, it was here on the daily, present on the 16-hour, present on the 12-hour, 8-hour, 4-hour. Let's see. Yep, inefficiency is still present. 3-hour. Yep, inefficiency is still present. 2-hour, still present. 1 hour. Alright, we've lost it on the 1 hour. So let's go back to the 2 hour. Yeah. And let's just mark it out. So this is now your point of interest. You already have your bias to the upside because we had the liquidity purge, sharp reaction with no cooperation, right? We had a break of structure to the upside here. So our move is confirmed. our bias, our market direction is confirmed. So this is now our BOS. Right? We had our break-off structure here. And now this is our 2-hour inefficiency and higher time frame point of interest. Again, zooming in here, you wouldn't look to take your position here because let's just say the 50, your stop loss would have been 30 pips, and you're not looking for a retail trading stop risk to reward ratio setup. You're looking for more risk, like higher risk to reward probability, right? So that was top down analysis, working your way down from the top, from the higher time frames down to the lower time frames, identifying a more precise, a more accurate point of interest. So for example, on the 2-hour, our inefficiency was this small. But if we go back to the 16, you see how we've cut out almost half of that point of interest, which gives us a more accurate, precise reading of that inefficiency. So what we do now is we look into this region here for our entry, right? Now remember how I said that it also lined up with this, which was the daily open of the sponsored candle. This was due to be a reactive region. So what we do is we work our way down the time frames until we see our entry. Let me just zoom, go back to here. So working our way down, we don't really see much. It's all a bit of a blur, right? Continuously working our way down. Okay, we're starting to see some inefficient price action within this region here, which is good. 10 minute, 7 minute. Okay. Now, let's look here. We've come to the 7 minute, right? We've reacted off of, so this was the inefficiency here. We've reacted off of the 50%, as you can see, right? This is the 50% here. We've reacted off that nicely. We've rejected that region. We're showing a willingness to not go any lower, right? We've broken this level here, which I wouldn't consider a break of structure, but I'll consider it a sign of strength, simply because of everything else that's lined up in the past as well. So sign of strength, yeah. Simply because of obviously in the past, on the daily, we had our break of structure here. If you remember, let me just zoom in for you. We had our break of structure here. So I know this is going to go to the upside. So having my break of structure after my point of interest hit is it's all right if it doesn't hit, but I'd prefer it if it did. But here it showed a sign of strength, so I was like, okay, cool. Let's just replay this. Go back here. Yeah. So we had our sign of strength, right? And now what I identified was this inefficiency within here. This is zooming in. So you saw how we zoomed in from the 30, 40. In this region here, we zoomed in to have a more accurate understanding of what was going on within this price region, to have a sharper entry. So I'm like, okay, we have this inefficiency within here. This is in a more discounted market, but we're kind of having some rejection in this level. So I feel comfortable taking my position at the fulfillment of this inefficiency and having a, what is this? Let's just say 5.5. 5.5 pip stop loss, right? We'll let this run. So let's just see how this plays out. That's how you take your positions. We literally went from a 200 pip stop loss to 5. Yeah, and let's just see how this works out now. We consolidate for a bit, tap entry again, break of structure here. So let me just pause. So we had a break of structure here to the upside, right? This break of structure to the upside would have given us our reason to break even, bring your stop loss to break even, risk-free position from now, right? And let's just say you would have taken partials when price took out any of this external range liquidity, resting above here, anywhere you feel comfortable. And what we saw was price just ran to the upside. So let me just zoom out a little bit. Let's go to the 30-minute. We saw price run to the upside, and let's say our take profit was here, right? We would have made a nice 33% trade. Continue, see how this plays out. Boom, take profit, 30% in a week. This would have been a beautiful setup. And what we actually saw, right? If we go to the, let's just say the hour, what we would have seen was this. This actually ended up running much further. There we go, break of structure again to the upside. There we go. And this thing just carried on climbing and climbing and climbing. And let's just say for the sake of the argument, you decided to hold all the way to the top up here. You would have made 100% back, even more. What is that? You would have made 122% back. That's how you start swinging these trades, and how you make high probability, how you find these high probability setups. Understand that if you find the setup from your daily, the likelihood that your direction is valid is extremely high, and also the likelihood that the move is more long term is also high, because higher time frame direction is basically going to give you insight into where the market's going to go long term. Whereas like on the 1 minute, a break of structure is basically it won't give you any information. Whereas on the daily, we saw no cooperation on the daily. We saw rejection away, so now we know we're going to go to the upside. And if we go back to the daily, look, we had a rejection away from this level, and now look, we're starting to climb. Yeah, and if we just play it from the daily, we're just going higher and higher. So this would have been a total of 1,200 pips. That's how you combine your top-down analysis with your zooming in to find these setups, and within that, you apply the concepts. You apply mitigation here. This is a sponsored candle here, inefficient price action within here, and zooming in within here. I highly recommend watching this video a good couple times. Make sure you literally drill this into your brain. This is the technique and strategy that you should be applying when you when you come to the charts. Don't come to the charts and just go to the 2 minute and try to find your setup, because trust me, you won't find anything, and you're probably just going to be throwing your money at your screen. Like, you're going to be losing. So make sure you're understanding your higher time frame direction and use your lower time frame for your entries. Besides that, thank you guys for listening, and on to the next.